Welcome back, traders. This is Impact Trading Services data service where we train traders how to use trends and data to book larger profits with a degree of predictability that can give you an advantage, an edge during the trading session, trading day. Now, this works for position traders, swing traders, intraday traders. All right, we're going to do Monday. Really, the trading day will be Tuesday because of Christmas. Tuesday, January 7th. And we've already drawn before the trading day. We already went to the weekly chart, drew our highs and lows, weekly opens, weekly closes, weekly highs, weekly lows, monthly high, monthly lows. And we've drawn them in areas where we believe that the price will most likely have buy or sell orders in the market. We call those order blocks or zones where institution places buy sell orders in the market. So we've drawn these levels, and then we start the trading day. Now, first, what we want to do is we want to go to the data. So we're actually doing December. We would go to the December data for the month of December, and then we want to look at the data first. Right now, we're actually doing the December 27th, the week of the 27th. So we would look at the December data. This is the day that we're doing right now. So we would have to look at this week before Christmas and see the trends in the data. So the 2 weeks before Christmas, our highs would be 40, 4,300. We have 2,000, 3,500, 2,000, 2,000, 3,600, 1,500, 1,000, 1,000. Those are usually consolidation days. When you see a 1,200 or 1,000 price is usually consolidating. And then we have a 3,500. So this is all the data that we would have. Our highs are in the 3,500, 3,600, and extreme would be 4,000. And then our lows would be 1,500. Now, we're going to be looking for an extreme in the range during the trading day, but we have all that data, and then we go over to the chart, go to the daily, and then we want to get a picture of what the days did before. So we have some consolidation days here. The smaller ranges are consolidation days, and then you have some ranges where you had this distribution in the market, where there was a larger market move up and down. We are in an uptrend. That's 3,500. Those are distribution days. 3,600. This would be a consolidation in the market. Then we have, that was probably the 35, and that was your 400. And then you can look at these weeks right here. All right, so going into this trading day, we already have our ranges in our mind, and then the data. So then we start trading, and then we can start planning trades once we see a daily range reaching an extreme. All right, let's look at that on the hour. All right, our first trade of the day would have came towards the end of the London session and the start of the New York session. So price already pushed up from 2,300, 1,300 pips. So we're at 1,300. We get an hourly sell signal here. So this is a valid sell signal on the 1 hour at this pre-drawn level of supply and demand. And then on the 3-5-15, that would be your first trade of the day on the 3-5-15. We have a valid sell signal here at the start of the finishing up the London session, starting New York. We have a head and shoulder pattern, and confirming price action where we would place a short trade here. The short trade here, first time back, would have booked you 700 pips. Now we say first time in these areas, gold usually retraces 1,000 pips. That happens every month. Now this is the end of the month, but this first trade here gave you an opportunity to book 700 pips for the first trade. Now as the trading session goes on, what we are thinking about during the day is how far has this trade moved. So starting at 2300, we've already got 1300 pips here, and then we get a sharp move up during the London session 1500. That may have been a new spike, we'll have to see. But now we have reached an extreme at a pre-drawn level around the 35 area, the 5s and 0s, 0s, 5 zeros. We've got the 3 and we got the 5. So now we're thinking, well, we're not extreme. So let's go look at our data, and we're doing December 27th. So on December 27th, this is the month of December. On December 27th, the highs in the week before were 3,600, 3,500. Those were the highs in the week before. The highs the week before that was 3,400, and an extreme was 4,300. So we have 34, 36, 35. And then this daily range today, meaning the 27th, was at 35. So we have an advantage knowing that the daily range is already at 35. Now if the daily range wanted to go up another 1,000 pips, or another 35, another 500 pips, then we would know that we should look for a supply and demand area at 500 pips up. So you could even place a trade here with a stop loss in this area, be stopped out, and then place a trade here in this area based upon knowing your daily ranges. That's a 4,200 coming into a 0-0. And if we look on the chart, this lineup, we already drew a monthly support, a monthly resistance line right here. So orders to sell would be here. So our next trade of the day would have been at 1,500 always with trade confirmation. 1,500 hour in the session would have allowed us to place a trade. Now remember, every single month when gold enters into a monthly, weekly supply and demand level, whether it's trending up or whether gold is trending down, price retraces at least 1,000 pips. And it's not uncommon to see 2,000 pips or more. Here's your trade signal on the 3-minute. Here's your trade signal on the 5-minute. Here's your trade signal on the 15-minute. So even if you place a 15-minute on a 15-minute confirmation, you still have 1,300 pips. And then support becomes resistance. but we're into the next trading day. So you would have received two trade signals, possibly one here at 1400 where support became resistance. But really the larger move would be when price enters, first time entering into the supply or demand area in a trend, and then pull back. And then that's your trade. And then trend traders would look to trend and position traders. If you are a trend trader, this would have been your take profit point. If you're only trading with the trend, then you would have profited here, and then you would have waited till price retraced to get into a trade long. So this, knowing your data for trend traders, for swing traders, for all the traders that enter the market, you can use the daily range, monthly range, weekly range, and then we have the New York session range data and the hourly volatility for the New York session in order to plan your trades. And then you can book larger profits, because every single month, as you've done your studies, you know that price will go into the direction of the orders at least 1,000 pips every month. That is every month. Alrighty, that is the daily range practice for today. Alright, study, and you will become a consistently profitable trader as you continue to study, backtest. This is how you will use daily range data before every trading session. You'll pull up your data sheet, you will review the data, you will look at trends in your data, and then you will book larger profits with a degree of predictability, knowing your supply and demand, support and resistance areas pre-drawn on the chart from monthly, weekly, highs, lows, open closes. Now this works for daily. This works for 4 hour. If you're a scalper, they're the same on the 5, 3, 15 minute. Price moves the same during every time frame. All right, we will have some other videos for you. Go ahead and review these videos, and then get out to our YouTube group. Subscribe here. We need subscribers to continue to post videos and grow the channel. And then we actually have a great community that's growing for our Telegram channel, where you can actually place trades and talk about how all of those who are coming along on this journey will become consistently profitable traders in 2023. So we look forward to helping you become a consistently profitable trader in 2023. Subscribe and join, and we'll see you in the next video.